Welcome to Financial Accounting Basics Part 2. Let's get started. We know from our prior modules that the purpose of accounting is to help people make decisions, and the purpose of financial accounting is helping investors and creditors make decisions. Let's take a closer look at investors and creditors. Investors and creditors can be individuals, businesses, or governments. Investors and creditors give money to businesses and hope to get more money back in the future. Creditors lend money. Investors are owners of the business. The money given by either the investor or creditor is called the investment, and when it is given back to the investor or creditor, it is called the return of the investment. Any extra money received by the investor or creditor is called the return on the investment. Let's take a look at an example. Here we've got a guy that says, "Joe, may I borrow $1,000? I will pay you $1,200 next year." So if Joe gives the money to his buddy, $1,000 is the amount of the investment. If Joe gets paid $1,200 next year, $1,000 is a return of the investment because that's the amount that Joe lent. And $200, the difference between the amount paid back, $1,200 less the original investment of $1,000, $200 is the return on the investment. But here we've got the guy saying, maybe, but how do I know that I will get my money back? That's where accounting comes into play. Remember, accounting is to help people make decisions, and financial accounting is to help investors and creditors make decisions. So we've got a request for a loan, and the potential lender or the potential creditor is asking, how do I know if I will get paid back? So financial accounting comes into play in helping make this decision. The most general of the financial reporting objectives is to provide information that is useful in making investment and credit decisions. That's what we focused on so far. Getting a little less general, financial reporting provides information that's useful in assessing the amount, timing, and uncertainty of future cash flows. Thinking back to our previous example, we want to help Joe assess how much he will get paid, when he will get paid, and any uncertainty associated with those payments that might come into play. This leads us to the most specific objective of financial reporting, and that's to provide specific information about resources, claims to resources, and changes in resources and claims. As we get more into financial reporting and the financial statements, we'll understand the specific objective more clearly because the purpose of financial statements is to provide this information. Before we study financial statements, we're going to discuss a few fundamental characteristics of financial statements. First, a means to an end. This is terminology that's often used in accounting to refer to the fact that accounting aids in decision making. Next, general purpose. Financial accounting prepares general purpose reports. They are not modified to fit the needs of any particular users. Third, financial reporting. Financial reporting includes financial statements, which we'll discuss later, and various press releases, announcements, and projections. Financial reporting is very broad. The focus of the remaining video series will be on preparation of financial statements. Next, estimations. Many people believe that accounting is an exact science, but in reality, many numbers included in the accounting reports are estimated. Accounting is not an exact science and is frequently referred to as an art. Next, explanations. Financial statements include disclosure notes to help explain the numbers. Financial statements are not complete if these disclosure notes are not provided. Next, historical. Financial statements are primarily based on things that have already happened. Financial statements are more about the past than the future. So let's review. Investors and creditors give money and hope to get more money back later. The three objectives of financial reporting can be viewed as general to specific. Financial accounting has several fundamental characteristics. These fundamental characteristics are a means to an end, general purpose. Financial reporting is broader than financial statements. Financial statements are historical in nature. Estimation is required in preparing financial statements. And finally, explanations accompany the numbers. So let's practice. Joe invests $1,000 in Acme Fireworks stock on January 1st, 2000 year one. On April 1st of 2000 year one, he receives a dividend of $50. On July 23rd, he sells the stock for $1,200. Is Joe an investor or a creditor? Since Joe is buying stock, Joe is an investor. If Joe were lending the money to Acme Fireworks, he would be a creditor. Next question. What is the amount of the return on Joe's investment? So we want to calculate the return on the investment. To calculate the return on the investment, we determine the amount that's repaid, $1,200 plus $50, less the original investment of $1,000. So the return on the investment is the total amount repaid, $1,200 plus $50, minus the original $1,000 investment. So the return on the investment is $250. Finally, what is the amount of the return of the investment? The return of the investment is the same as the original investment or the purchase price of the stock, which is $1,000. Our next question. What is the most specific of the three purposes of financial reporting? Provide information that's useful in making investment and credit decisions. That's the most general. Provide information that is useful in assessing the amount, timing, and uncertainty of cash flows. That's less general. Provide information on resources, claims to resources, and changes in them. Answer C is our most specific objective of financial reporting. Our next question. Financial accounting is more about the past than the future. We know that accounting is historical in nature, so that question is true. Our next question. All financial accounting measures are precise and accurate and do not rely on estimates. We know that accounting includes estimates, so that statement is false. Our next question. Financial accounting reports are modified to fit the needs of the user. Financial reports are general purpose. They are not modified to fit the needs of the user, so that question is false. Wrap things up. Why is financial accounting cool? Accountants know the rules of business, so accountants rule the world.